Eric Muadit, Muadit.com, with a long weekend market analysis for the weekend going into September 5th, 6th and 7th, 2015. Take a look at how the Asian markets closed. Just a reminder, right now I'm recording this with about an hour to go before the US markets close. So keep that in mind, and we are looking at the close in Asia, slightly down for the most part. We take a look at how European markets have closed going into the weekend, and we see also down about 2% across the board. Take a look at how the Americas are trading. We see that Brazil is also currently down, and Canada is also down about a percentage point or so, and of course the US markets are down about close to 2% on the Dow, 1.5 on the Nasdaq, and 1.9 on the S&P 500. The VIX is up about 14% right now. Gold slightly down, and we see that crude oil is also slightly down. All right, let's take a look at the charts, and we begin by taking a look at the Canadian market, the TSX, and you see here having a down session about 1%. And the best way I can show this daily chart resistance, if you take the top side of the daily chart, you'll see resistance on the RSI. In fact, this is mirrored perfectly by the Dow. So take a look at the Dow right now, again with about an hour and a half to go before the close, and you can see the Dow has a clearly defined resistance line. If you take the highs recently on the Dow, draw them like that, and you're going to see this across many of the charts worldwide. Resistance on the daily, again, let me draw that again because you might see this a couple of times in this presentation or this analysis. Right there is one resistance line. There's another one which is a backtest failure. If you draw it like that, you can see that it forms another double top. So the line that broke, and this line is critical in my opinion, this break here on the Dow is corresponding with that drop. We haven't been back there since, and so the break of that line, when you extend the break line, you see that the market has stalled this week, twice failed to move above the line. So clearly one cannot turn bullish until the market can clear that line, and that's as simple as I can personally put it in terms of how to simplify what's going on in the market. It's really been confusing the last week or so. Now if you take a look at the Canadian market again on a weekly time frame, we can simplify this and go back to the line that was previous support. So let's draw the line right here. This was support going back a couple years. Market's been bouncing nicely over the one or 2 years ago, over the last 2 years or so, holding nicely on the weekly for nice rebounds. And you can see what has developed here in the last month or so is this has become resistance as far as that weekly chart is concerned. Also, don't forget that we have a crossover here that is bearish. That crossover is again between the 13-week moving average undercutting the 34-week moving average, which tends to be bearish. The last time we had a crossover, or the last two crossovers, the main crossover that was bullish was this crossover here that led to a nice movement in price again between the 13-week and the 34-week moving average. So we are looking here at a situation where markets could be changing their behavior, and probably we can even call this maybe bear market. Looks like it to me. In other words, lower prices are not going to be surprising anybody. So the biggest risk in the Canadian market and many other world markets are the fact that we are looking right now on the monthly charts. We are showing that the MACDs and the RSI, so here we see a break to 3-year lows on the MACD. We see that the RSI already broke to 3-year lows over the last two months or so. So that is the biggest and the strongest bearish argument for lower prices. And that's the biggest risk in this market, that we are showing a major sell signal in terms of which way the market is going to go over the next couple of months, maybe over the next, who knows, years maybe? Tough to tell. As an example of this, take a look at the French market, the French CAC 40. And so you can see here European market representation. And what you see is clearly, if you take a look at the RSI and the MACDs on a 3-year monthly chart, you can see the risk is that this market also cracks to 3-year lows here. That's the threat. We see that already one of the MACDs is just now looking to break to fresh 3-year lows. Also a chance to move below zero for the first time since, I believe, 2009. So that's a problem right there, indicating that the idea that markets can go down really makes a lot of sense based on the charts. If you take a look at the long-term picture for the French market, you can see here that over the last 10 years or so, maybe 15 years, every time we break a major trend line on the monthly chart, we get this drop. This is in 2000, 2001 to 2002 during this bear market period. We broke another trend line late 2007. That break was responsible for this 2008 crash, and we see here we have the possibility of breaking below that trend line, which could suggest that this could be the beginning of another push lower. So the risk, and it's a risk because things could play out different, but the risk here is that the charts are telling us this is easily where things stall. In fact, if I can show you the MACD, take a look here. The MACD moved below zero for the first time in many years, which was this period here in 2001. Again, it moved below zero here late 2007 during those highs there. And right now we are looking at the threat of breaking below this trend line here and also moving below zero on the MACD, which could suggest that this is another beginning of a major drop in market. So that's the risk, and the risk is pretty much, you can see this across the board. As I say that, here we see that if we take a look at the London Financial Times, the FTSE, and go back to the charts here, long-term picture on a 3-year monthly, we've already broken down to 3-year lows. That's a very bearish signal here on the monthly. RSI, also we see that the MACD, if not in this instant, both MACDs are trading to 3-year lows, and the main MACD is just now about to crack below zero. So these markets don't look healthy, to be honest with you, and that's the risk. The risk is for lower prices. If we take a look at the FTSE from a daily chart, we see a similar type analysis to that of the Dow, which is there was a recent RSI break right there. This RSI break did take the market from that break, which was during this period here. Market hasn't been back to those levels, and so if we extend that same red line, you can see again here recent double top resistance on the daily, which might explain why markets are struggling as of right now on their daily charts. So that makes a lot of sense that we are pulling back here on most markets. If we take a look at the daily for the FTSE, we can see a recent break in the RSI. If you extend that break, you see we get this double top on a daily chart, which might explain Friday's drop right there. And also keep in mind that this break in the RSI was responsible for taking the market off this level here. We haven't been back even close to those levels. So simply put, on the daily, the best thing to do is, until markets can get enough energy to move above this line of resistance, which was based on the recent break, until markets are above this line, I think this market has to be viewed as a bearish market. It's only when the markets finally clear that red line that one can look for reasons to be bullish. Right now, there's not a lot in the way of reasons why the markets could be indicating a bounce, and I'm talking about a strong bounce. Yes, markets can bounce day to day, but it looks like every time they bounce recently, they've been coming into trouble. If you take a look at the hourly for the FTSE, we can see that a recent break on the RSI on the hourly. So the hourly break right there took the market off this level, and we can see that gave us a nice straight line right there. And since then, resistance on the red line, uniform resistance, which I call uniformity, and you can find my uniformity videos on my YouTube channel. Also, we see resistance here, which was off this highs here, and also resistance with the double top resistance in the hourly, which is the reason why the market was down on Friday. In fact, if you take this red line backwards this way, You can see the same red line gave you the sell signal, which is off this high here. Another sell signal on the red line, which is right here. So that's red line has been very instrumental in telling us where the market was going to stall. So clearly, until the market down the road, in many months down the road, until the market can climb above this red line, you have to assume that this market generally is looking to trade lower over time. It's only when it breaks out above that line of resistance that we can start thinking that maybe it now has a chance of bouncing. So for now, the conclusion is that this is the line to watch, and until it can move above this line, these markets are bearish in my opinion. Take a look at the German market, the German DAX, and again, most markets are displaying this type of bearish formation where we have the monthly RSI trading at 3-year lows. That's the risk here is for lower prices. The risk is for an even bigger drop if it cracks below 50. You can see that as of right now, the MACDs are already trading at fresh 3-year lows and also moving below zero for the first time in many years, indicating that, quite frankly, momentum is still to the downside. And when I say momentum, be aware, if it cracks below 50 here, there might be another acceleration to the downside. If we take a look at the Russian market by way of the RSX, we can see here that it broke recently, right here on the daily, which is off the highs here. And so we can draw a line where it shows resistance, and you can see that in the last couple of days it's come and hit that resistance, which is the reason why it's stalling. It is also struggling to hold above the 50-day and the 200-day moving average. Both of them are pointing lower, which indicates momentum is still to the downside. Take a look at the monthly chart, and you can see the risk of breaking below recent monthly closing lows is very high right there. Also, the risk that the RSI on the monthly moves below 30.90 is very high. So lots of bearish things here. Also, we see that the MACDs are already both below zero, and the risk of making fresh lows still exists. So the Russian market, by way of that ETF, the RSX, also doesn't look very hot. In fact, also like to mention the EWZ, which I forgot to mention. So the Brazilian market here, we can see continues to drop, and I've been talking about the risk here is that the market could be trading lower. Why? Because if you take a look at this monthly chart, it's been trading at fresh 3-year lows for over the last month, 2 months during this recent slide. We see here that it is also moving below 30.9 on the monthly, which is a very bearish development. You see here that the MACDs also, which are trading below zero, are cracking to fresh 3-year lows, and also here, while trading below zero, they are moving to fresh 3-year lows. So yes, even the Brazilian market continues to be very, very bearish. If you take a look at the Hong Kong Hang Seng, and just where have we seen this before? Everywhere. We see here again moving to fresh 3-year lows on the monthly RSI, MACD. So 3-year lows on the RSI, very bearish. 3-year lows on the MACD, that's not good. We take a look at the weekly, and we can see the problem here. It is now trading below 30.90 on the weekly, which means that the chances of a quick bounce are not there for now, in my opinion. So this is not a good sign where markets trade below and stay below 30.90. In fact, quick note here, if you take a look at the Dow's action today, you can see that the Dow also today dropped below 30.9. If you understand these numbers, and I explain this on my YouTube channel, this might also be the technical reason why the Dow is down for the week about 3.6%, because it's moving its weekly RSI below 30.9. And this chart might be leading the US markets. You can see the US markets had almost a V-type recovery here and a bounce, okay, but the US market is probably now somewhere here with the threat of breaking these lows. Now you can see here that the Hang Seng did break the lows on retest, suggesting that the US markets might also be looking to do the same thing. In fact, let's take a look at the SPX daily, and you can see here is where we got this V-type recovery. We've come back a little bit. It looks like what it's trying to do is test these lows. Now if we go by what Hong Kong did, more than likely we might end up breaking those lows. So the risk is that this market is actually preparing itself to test recent lows and even break them, just for this confusing everybody. If we take a look at China, we can see here there was a nice bullish crossover between the 13-week moving average. This is a weekly chart. 13-week moving average, very nice crossover here that led to a nice run, and now we see the exact opposite, which is a bearish crossover between the 13-week and the 34-week moving average. Might indicate that over time even the pressure here continues to look down. Keep in mind the line that we were watching for potential support seems to have been broken. So there are two lines. The first line was around the 50. We seem to have made that now into a resistance line, and also the line connecting support zone here seems to have broken over the last 2 weeks. So even in China, we see that the chart seems to be breaking down after it had a nice close to 2014 and a nice run for the first half of 2015. If we take a look at the Kospi, South Korean market, we can see that just like other markets, monthly RSI, fresh 3-year lows. That's very bearish. MACDs on the monthly, fresh 3-year lows. In fact, both MACDs are looking very bearish, are moving to fresh 3-year lows. So you only need one of the MACDs to be moving to fresh 3-year lows, but here we see both MACDs are doing it, which is actually ultra bearish. One can expect markets to be down in the coming weeks and in the coming months. If we take a look at the Japanese market, we see the threat here that over the next month or so, this could also very easily slip to 3-year lows. And even though it hasn't done so yet, also the MACDs are not very far off from making a move to fresh 3-year lows here in terms of Japan. So I don't think it's going to have a nice isolated rally while other markets are going down. The risk is that it just, as part of what's going on worldwide, could struggle based on the fact that the chart could also move to fresh 3-year lows. Not to be left behind, if we take a look at the Nifty, on the monthly, we see right now the Nifty is also just about to crack below 50 on the monthly RSI. If it does, one can expect this to be a down market. So watch that 50 level. If it cracks below 50 on the monthly RSI, expect a big down month. Also keep in mind, if we take a look at the MACDs and the RSI on the monthly, the problem here is the risk is that this cracks to fresh 3-year lows, which is going to be bearish. We've seen this on many charts across the globe. Also, we see that we're already trading at fresh 3-year lows on one of the MACDs, and we're also pushing below zero for the first time in a while. So the risk is that this could get worse, even though for the month it's already down about 4%. It could get worse if it cracks below 50 on the monthly RSI, or if the MACDs continue moving to fresh 3-year lows. If you take a look at the weekly for the Nifty, you can see a couple of observations. We failed to hold on this recent weekly closing low, so we broke below that. Of course, that is not good. We also broke below October lows this past week, which is also not good. So lots of bearish developments this past week as the market was down about 4.3%. So that's one view. The other view is obviously now that we have this crossover between the 13-week moving average and the 34-week moving average, which is bearish, which would indicate that month to month, week to week, this is now looking like bear market. The last time we had a crossover was here, late 2013, and of course we saw the market move on to fresh highs. So the risk here is that this market continues to trade lower, just as we've seen on as far as other markets are concerned. Lots of breaks on the monthlies, on the weeklies, indicating week to week, month to month, markets are still looking to go down. If we take a look at the Australian market, on the, this is a 5-year weekly chart, 5-year weekly. Take a line connecting recent RSI lows like that, and you can see this connects nicely with this double bottom support here and this recent low, and also there's a slight support attempt there. As of this week, this has broken. So as long as there's a break on that weekly chart, that's bearish. If you take a look at the 34-month monthly chart for the Australian market, it's been trading at fresh RSI monthly lows. So here the RSI already broke down about 2 months ago, which might explain the bearish tone. Also the MACDs have been at fresh 3-year lows for the last 3 months or so, 2 months or so, breaking to fresh 3-year lows and also moving below zero. Might explain why it's been down substantially over the last couple of months. Take a look here lastly at the South African market, South African market, which, as you can see, personally was the first market that gave me a sell signal, because once it broke to fresh 3-year lows here, and also when that was taking place, I cautioned those who were watching the videos a couple months ago that this break was probably an indication that markets were going to change worldwide. We saw that happened also, and eventually it broke to fresh 3-year lows on the monthly MACD. So, you know, sometimes you see signals in other markets before they come to your market. So the South African market here still continues to be trading at fresh 3-year lows on the RSI and the MACD. Indication there is that it seems to be one of the leadership markets down, and since we haven't seen any type of support on this market, my thinking is that markets continue to struggle. Here we see that it broke also. We got the 13-week moving average recently undercutting below the 34-week moving average. Generally speaking, that tends to indicate that markets are going to be down in the coming weeks, in the coming months. How about we conclude with the Dow monthly? And be on the lookout for part 2 of my market analysis, part 2 of the US market analysis. And we are looking here now on the Dow monthly with about an hour to go. And as of right now, and we've seen this everywhere pretty much, and we go to the monthlies and the monthly chart. RSI on the Dow, 3-year lows. We already cracked below 50 on the Dow RSI. We see here that the MACDs are trading below zero on one MACD, trading to 3-year lows on the Dow, and also the main MACD just now cracking to fresh 3-year lows. So even the US markets, just like world markets, look to be set to go low. Eric Mwathe, again, be on the lookout for part 2 of my US market analysis. Should be out either on Sunday or Monday, since it's a holiday in the US. Have a great weekend. Peace and blessings. Woo! E-A-C-S.